Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. It greatly helps the channel, as you guys know. So thank you very much for your support. Now, let's look at the market. We always look at the three big factors, the big indicators, the things that nobody pays any attention to, and they are by far the most important. Dollar remains a little bit down, which is good. We would like to see it moving towards more the low 90s. So don't forget, the lower the dollar, the higher the risk assets. So that's number one. Number two, we are seeing yields dropping and bonds rising. I would like to see a little bit more of that. I would like to see TLT going into the 90s and staying there. But as long as it's fairly stable, that's good. So don't forget, higher yields, particularly, it's not just about the higher yields, is the speed of the increase in yields can be a little bit more concerning. As I've told you before, the bond market is by far the most important. It's bigger than the stock market times 3 or something like that, and it's much bigger than crypto, and it's much bigger than what you would basically is bigger than all the other markets. Essentially, that's what you need to keep in mind. So it's good always to keep an eye on it. And of course, oil is down quite a bit to the low 60s. Would like to see a little bit lower, even potentially in the 50s. Let's see if we get there. But in any case, as long as it's below 70, 75, it should be okay. Now, we've discussed this before in my previous video. If you didn't watch it, I highly recommend you do. As I've mentioned, and I've missed this, and most analysts have missed this, the 4-year cycle for crypto seems to have, or at least there's a very good chance that it has changed. So what matters the most is business cycle, and business cycle is heavily linked to liquidity. So those two go hand in hand. Why? Here's the question. So whenever the government has to roll over large amounts of debt, rollover, refinancing, whatever you want to call it. So let's say the bonds are hitting maturity and you need to issue new bonds. When you issue huge amounts of bonds, you're creating that said liquidity. But you are making a massive refinancing effort. So we are talking $9-10 trillion. We're talking like a third of the US national debt, maybe a little bit more. So you need the rates as low as possible. That's why Bessent and the likes have been pushing the drum of lower rates forever. Now, we are at currently higher rates. Does that mean that we should be concerned? Now, here is the part that I missed, and I will just quickly recap. The reason why the crypto cycles have been 4-year cycles is because yields, the bonds, the refinancing period of government debt has been, with the average maturities, 4 years. So every 4 years you have this spike in liquidity. The spike in liquidity translates into lower interests, higher spending, higher borrowing, more investment, hiring more people. People are happier, CEOs are happier, stocks are higher, the wealth effect gets into full effect. You have a big blow off top, the whole debt is refinanced, and then liquidity starts to get taken out of the market because it's no longer needed. So then, of course, you have you have the bear markets, you have the corrections, you have all of that, right? A little bit of time period that nobody's happy. 2018, 2022, etc. But in 2021, the business cycle and liquidity peaked in March 2021, and then you had, of course, you had the Bitcoin going into May 2021, and then you had huge amounts of leverage driven by the 0% rates at the time to try to keep the price of Bitcoin higher. However, and this should tell you everything you need to know, after all that leverage, after all that effort, we managed to go from 65 to 69,000. That's a 6% move. After all that leverage, all that effort, that was the best we could do. That tells you how important it is not to fight this rollover of debt. The reason why I'm reinforcing this point is because any YouTube channel, any YouTube crypto page on Twitter, etc., they talk about the 4-year cycle, but they never give you any hint why 4 years. Why not 6? Why not 8? Why not 3? Why not 2.5? Why not 1? Why 4? And the reason is the maturity and rolling over and refinancing of government debt that was with an average maturity weighted to 4 years. 2021, March 2020, during the year of 2021, the government refinanced it, did this exercise again, but instead of 4 years, it pushed it to 5.4 years. So that would put us around Q2, late Q2, early Q3, 2026. Is it a guarantee? Can I guarantee that we're going to get to those levels and then we're going to see the final top? No, I cannot guarantee. And I can tell you that it's going to be very hard, or at least I'm convinced it will be very hard, because I can see October and November being very good months and even part of December. And then having like a mini parabola, like a mini blow-up move, and everybody is going to get convinced, okay, that's the top. Q4 2025 seems about right. We had the move. Bitcoin is 200K. That seems about right. We're going to correct from here, and that's it. Now, let's talk next year. The better market will come now, and for 12 months, we're going to stay here. I can see that correction in December starting, trapping people, saying this is the top of the cycle, having a correction maybe until March 2026, another 30% or so, and then we go up for one last time into Q2, Q3. I'd say until March. So basically, correction starting in December, going until March, April, I don't know, somewhere around those levels, and then going one final top into the period between April to July, somewhere around that. Once again, it's fun to guess. It's entertainment. The key will be, what is liquidity doing, and where is the business cycle? Where is ISM? By the way, ISM comes out this week, so pay attention to it. I would hope to see it, going into the 49%. Once again, above 50 is good, and then we would like to see it, and usually it peaks in the high 50s, 58, 59, 60. That's where you see the peak. We are nowhere near that. We are at 48. So, to me, that's the important thing. Don't get so married to timelines and to prices. Look at the conditions. What are the conditions doing? And then you have to play, of course, with probabilities. I mean, then it's your own risk management. If you say, I think there's a 50% chance the cycle is stopped, okay, then adjust your position accordingly. Then you think, I think it's 20%. Okay, then adjust your position accordingly. Oh, I think it's 100%. Then adjust, once again, behave as you feel that, as your conviction tells you about where you are in the cycle. It's not up to me to tell you. It's not up to me I'm not here to recommend anything. It's up to you. You have to figure it out what's your conviction, what's your feeling, what you believe. Okay? So with that notion, we should see October and November being quite good months. Now, please, does it mean every single day, every single hour of October and November? No, it does not mean every single day, every single hour. I wouldn't be surprised if we had another shakeout and Ethereum goes to 3,700 again, and one last time before we go into all-time highs. One of the reasons is Jim Cramer just said buy crypto. So he's a very powerful medium in this world. So I wouldn't be surprised that something bad happens and now, we sell off, from 114 to 106 and from Ethereum to 3,600 or so. I wouldn't be surprised at all if that happens. So always keep that in mind as well as a possibility. I would also like to see, slowly but surely, stocks like Nvidia doing a new all-time high, also having a little bit, the DAX in Germany doing a new all-time high, in the CAC in France. So basically, a little bit of more diversity away from the US. The Nikkei has been holding quite well. So these would be things that I would like to see as well. And don't forget, the more we move on, the closer we are to the announcement of the new Fed, the market will start to price in massive rate cuts and massive liquidity injections. And at the end of the day, liquidity explains 88% of the move. The remaining 12% is nothing but noise. That's all it is. Why does liquidity is so important? Because liquidity influences dramatically the business cycle, and both of them together is what leads into the Valhalla, into the periods of extraordinary performance. Now, one of the things that I've been liking the most in this cycle, and like many of my peers, is the level of fear, panic, and distrust of the market. So we can be going up 30%. As soon as we drop 3%, everybody loses their crap. Even in the stock market. I mean, I saw this chart where the net sellers, in terms of numbers, so not dollar amounts, I'm talking about sheer number, the majority of people are still net bearish. And for crypto, it's even worse. It's really net bearish. That's why we are in fear. We are still in 39 today. We're still in fear. Probably tomorrow will be somewhere neutral, like 44, 43, if I had to guess. But we've been in 32. 32, I mean, 30, you're in the middle of fear and extreme fear. This is what you are. But the last time we were there, Bitcoin was 80K. And now we are there, and Bitcoin is 114K. You see, that's the point. There's going to be a time, in my opinion, that Bitcoin's going to be at a 250K, and that number will be fear. We'll see. I'm going to be here, and I will let you know if and when that happens. Okay? But I do believe we're going to get there. So, as I've said before, am I seeing the liquidity peaking? No. Am I seeing the financial conditions improving? Yes, dollar down, oil down, yields down, all good. Am I seeing, is the business cycle peaking at 58, 59, 60, 61? No. So in my view, for me, I have nothing to worry about as long as that continues. And with that, thank you very much for your support, guys. Don't forget, like and subscribe is the only thing that I ask. And I'll catch you in the next one.